Good evening. Today we will talk about corporate governance, and we will introduce about definitions, various views of theories and views of corporate governance, and how those definitions and theories reflect the structures and meaning and the design of corporate governance, and also we will also talk about the role of information technologies, the data, and that are actually very important, has been always much neglected in the field of corporate governance. But in the context of Industry 4.0s and the automations and the prevalence of data and big data, I think it is very important that we need to stress again on the corporate governance. The corporate governance we will introduce in a way that gives you a very strong theoretical understanding, and so that it provides the flexibility for organizations to design their own corporate governance and in adaptations to the macro rules and environments, rules and regulations of the environments. Okay, so because we are being regulated by this for instance, the Stock Exchange of Thailand, and also those government rules and regulations, and also the macro global environment. In general terms, corporate governance is really a set of all these mechanisms, the things that we install. It could be policy, it could be the way we structure our managements, and the way we interact with our stakeholders, and the way we the topics and the types of focus and strategic reinforcements that we stress on governing our organization and communications and fulfilling the expectations of the different stakeholders, including our shareholders and these employees and things like that, and plus these institutions, which is the way we governs the rules and regulations and incentives and policies, and also this the structures of monitoring, things like that. And so it is a set of mechanisms and institutions which are aimed at protecting investors' rights. Okay, because very importantly, we have discussed about business ethics, which is very broad in understanding, in ensuring that what we do are conforming to certain universal rules and regulations and principles, and also provide the best outcome to our stakeholders, and also proactively dedicating our creativities and innovations to serve these society in a sense of corporate social responsibility and social entrepreneurship. But then again, we also need to have corporate governance systems within the organization in such a way that there continues to provide incentive and protection for the investors, our shareholders. And these are very important. And when they gain the trust and confidence, they will continue to participate and fund the organization. So we really need to have these mechanisms and institutions appropriately established, such as this management and control system, and allow this management and control system, which is really the mechanisms under the umbrella of all this institution, to help enhance the way we do our duty enhance corporate efficiency, creating essentially the share value to our company, to our shareholders, increase of the equity. Once we have done a good job strategically and operationally, and we gain a very attractive profit and loss, and also we can maintain balance and continuous expansions of our balance sheet, and in due course, of course, the creating share value for our shareholders and the equity increase of our company in the continuously. So we have already talked about it, and institutions and all these mechanisms involves principles, policies, practices relating to business ethics, and also expansion to our societies, and not only into the ecological environment, not only these shareholders, because without as we have discussed in many slides, without this relationship with this web of stakeholders, there are of course not just these shareholders, stakeholders. If we don't have that relationship maintained and establish a trust among each other, and interactions and open innovations among each other, it is very difficult to sustain. And if we are not able to sustain, so what is the point of the establishing the corporate governance? Corporate governance deals with all these ethical protocols and ethical regulations and duties, such as maintaining transparency in our company, informations and data and reporting systems, and the way we transact and deal with our suppliers, and also perform the duties to our employees, and cost maintenance, and managing the strategy, which is really to manage the profit, the profit, and which involves the cost. And so it really and cost is everything, all the activities we are doing. So really, it's about managing transparent activities within the company in that particular sense. And so, to be exact, corporate governance can be understood as a system where everything's are interrelated, and with our relationships are architecturally designed and operated. And that the data are transmitted in such a way that everybody can have that transparent data to help to be accountable accordingly. So it is a system by which companies are directed to a sustainable, continuous improvement direction, and that we are controlled in a risk manageable environment. So by the meanings of risk management environment, it means that because strategy, it's about making a decision, and when we make a decision, we automatically involve. We were it's like a trade-off. If we make decisions in this way, we will not take on another way. And by doing this way, we may involve certain risk, and that is the reasons that we also need to. It is really systems of risk managements and monitorings and things like that. So it is in view of all these mechanisms and rules and regulations of the institutions that being architecturally interconnected into a system. And so it is in principle, in other words, it is really a set of processes or customs or policies or laws or institutions that affect the way our company is performing, is operating. And it's and by that operations, it means direction, directed, and do it every day, routinely, managing it, administrations, and controlling within this in a stable manners. because with stabilities we can run, without stability we cannot run. So corporate governance provides the this stable environment for us to be able to be more innovative and things like that. So in that sense, you know, and they are being governed by business ethics, right? Because the business ethic tells you the principles of what is the conduct of good conduct and bad conduct. And so with that, you but this is a general issue, and so you specifically apply it into an organizational system, and that becomes a and protecting the shareholder, and that becomes the corporate governance system. So its purpose of the corporate governance system is to influence whether we directly or indirectly, you know, for example, if we influence directly to the shareholders, okay, we're going to have the shareholder meeting, and we're going to have this we're going to have proper reporting systems, and we're going to focus on sustainability issue. We're going to deal with proper procedures, and we influence them directly, but then also indirectly, in the sense that if we have a good reporting system, and you know, those shareholders in a way will get the trust and realizing that you know what we're doing, and by that they becomes more able and more trustable to invest more money on our systems, on our company, on our companies, in our company, and so indirectly, and also indirectly, the stock prices will also goes up. So there is this direct and indirect influences of these corporate governance systems, structures wise, policies and things like that, and it will influences the behavior. So whatever we design in our corporate governance system, it will directly or indirectly influences the behavior, just like this business ethics directly, indirectly influences the behaviors of the organizations towards resolving an ethical issues, and including contributing to the expectations of the stakeholders. So it is the same thing. One is very general, another and resolving certain ethical issue. And again, corporate governance is an ethical issue, but it is a very broad ethical issues that systematically involves a very well structured design of how we're gonna manage and lead the companies. And so from the concepts of system theory, there's one theory that is very, very important. And if all of you, if you have time, we can, you know, you can go in depth into the details, and especially for those PhDs or master degree, postgraduate students, or scholars like us, and we can you know, maybe spend more time on system theory. And we can gain a lot of knowledge about system theory. There are a lot of system theories, books, such as soft system methodology, SSM, and system complexities and system theory. The books out there, you can basically, you know, read it. And organizations can be perceived as structures, and you know that by system it means the relationship between each others, and the parts interrelated, and which forms the whole. And so whichever things, you know, when the parts are changing, the wholes are changing. When the wholes are changing, it influences the parts. So it is a interconnecting through ITs and information technologies and our policies and our monitoring systems and controlling systems and our incentives and our transparencies and accountability. All of this becomes a structure, right? The architectural structure. And of course, the supported by the IT, it will becomes digitized platform structures, and that would make the speed of interactions faster. And so organizations within that system theory perspective can be perceived as a structure okay, that responds to and adjusts to all the demands of, all the interrelated or interconnected parts and constituents of this element. So we are really nothing but treating the organization as a structure that reacts and communicate and fulfill the expectation of this various stakeholders, and because different stakeholders, this part, that part, could be functional, technical part, it could be the quality assurance part, quality control part, supplier side, customer side, and maybe bigger, these supply chains or whatever, or financials, or whatever. And then what you do is that you have to maintain the balance and reconciliating the demands of all these different stakeholders to achieve the goals of the company. So this is basically the how the business ethics and through the theories and principles provide insights and guideline for our companies to design and create a structure, corporate governance that can help us to achieve our company's goal. So from a system theory aspect, goals are formulated through a complex, and interaction is very complex, and especially so simplifying it with within a digital platform, and then monitoring through balance, such as balance dashboard, so that we can see the monitoring, and then we can use the analytics and capabilities of this artificial intelligence, or just the normal analytics that we can then monitor and controls and adjust and improve. So it is really a very complex system. And from a system theory aspect, this complex process involves in these interactions to achieve the goal. So therefore, the goals that we're going to achieve are actually formulated through this process, through this corporate governance system process, which is through this complex, because we are treating the corporate governance as the structures of interacting all this complex process. So it is a goals that are formulated through a complex process involving expectations of different stakeholders, and sometimes they're on common ground, and sometimes they're on competing expectations ground. But anyway, our goal is formulated through these structures of processes. So the better we can manage this lead and ensure that all these processes are interactively functioning, then the better the corporate governance system. So it is not quite difficult in concrete operationalize these extract forms of corporate governance system. Thus, the formulations of the goals is really an interdependent understanding and functioning and value co-creating activities among each of these constituents within this webs of this organization, so in which the aim is to express our goal that can be buy-in and as broadly accepted by everybody. And so there will be no conflicting and no clash, and so our companies can sail smoothly, towards the goal, right? Just like a boat, a ship sailing through the ocean, right? So to realize the productive systems, okay, as we have just said, a system is just the interconnections and formations of these parts and whole. We can exploit information technology, and that comes to the perspective again on ethics, because what is ethics? It's about providing conceptual, intellectual ground on why these things needs to be, this IT is useful for what purpose, for what ways, in what way it is useful, right, to help the communities or to help the organization, and why is it so? It is so important that it has meaning, and to dedicate to the welfare of this of the participation of these participants in using this IT, and that is all about ethics. So once you once we understand the foundations of ethics, we can easily conceptualize almost everything strategic and operational importance, and then incorporate them to design whichever we want to do, such as corporate governance. And this is just a slide of example. And I'll just demonstrate to you what does it means by ethics of IT. I have just explained it, but I'll give you more concrete example. Well, because IT provide is this IT technologies, and then through the technologies we can easily get the data out, right? And so through observations or the gathering of this data informations, memory, we can store, right? IT memory and storage information, and we can do these computations and artificial intelligence, neural network analysis, or just statistical, or just normal Excel based analysis, and then we can communicate, use those analytics and computational result, and we need to communicate and transmit all these informations to various parties. What to do to empower, right? So we give information to people, so people has this ability, more ability to make better decisions, and that is ethics, right? So we are supporting the analytical powers of people. So this is ethics. So empower executive and the company to promote a participative and share stakeholder welfare environment in their decisions making within that corporate governance systems that we are designing, because everybody work within this corporate governance system. So by giving people the ability to think and to and list the data, there will be more awareness, and more ability to integrate all these informations to make sound judgment. And so this is the ontological importance, right? And so because everybody has a freedom to information, and so this is part of the duty, but everybody also need to be supported positive views of this business ethic in a way that we can support them with all the data, so that they can better utilize their freedoms of information, and utilize their knowledge and towards this contribution, and be more creativity. So if we have the time, we will go to another slide. Marcus, we will probably talk about an innovative perspective on innovative dimensions or innovative view or domain of this business ethics, and so that we can transcend the business ethics from the normal growth, ways of comprehending this business ethic and the design of it, to a more innovative ideas. Because if we are not able to be creative and innovative, then fundamentally it is also lacking of a sound virtue and sound ethical reasons, ethical foundation. Because what is ethic is provide welfare, and if we are lacking of intellectual capability, that means we are incapable of providing welfare to the people, and therefore innovation is very, very important. And again, this is information plus IT, two of these important components or ingredients that are often less discussed in this literature. And so I just want to enrich and share with you and enrich each others to really be a part of the business ethics and corporate governance. So from this graph, we will kind of a summary of what we have done. We have presented in this information technologies ethics, the observation, gathering our informations, the memory, the storage of it, and the computations and analytics application of it, and then the communication it to the proper stakeholders and locations will solidify and enable the decision making, a sound, effective decision making within this corporate governance system. Thus, information technologies in that particular perspective, that it and fosters this participation and transparency and speed, and provide varieties of informations, quickly, at almost zero cost. And so it is supporting this variety, volumes of data and speed, and it is kind of a foundation, ethics of big data. In that particular view of specific view, if we infer and into a broader perspective, we can say that IT can really assist every views and theories of ethics. So it is every theory. We have the theories. We're going to discuss more about. I've given and shared on the stakeholder theories and this system theories moments ago, but then there are a lot more other theories, and we will also expand on stakeholder theory, and then all these ITs and information and innovations can actually be applied to every single theory, because every theory needs IT, and every theory needs information, innovation, things like that. So if we can, and this is an open discussion, open research area. Information technology assists our views and theories of ethics, such as stakeholder view, by exploiting, because theory and information provides the data, through the analytics provides the theory. So this exploiting the data theory, which we have this, which is the foundations of business ethics, the descriptive and prescriptive approaches of this business ethics, which we have talked about it, their interactions, and become productive, executing their productive function. So this IT plays a very, very significant roles to really enrich and enhance the functions of each of the theory. So it promotes an environment. So when everybody work within this theoretical environment, and with the support of IT, it even better promotes an environment where executive can be informed readily and duly on all this through the data and theory for the interest of fulfilling the expectation and interest of all the stakeholders. So it promotes an environment where executive can be informed of the stakeholders' best interest in decision making. What does it do? It leads to more trust. And the more it leads to more reliability, because we have this reliable analytics and and computation of all this data. So all these trust and reliabilities are intangible assets. So IT supporting the corporate governance system through the various theoretical foundations and business ethic principle, it will lead to more tangible asset, and then return on investments will be more and more and more. So so we do not think that corporate governance it's inactive, it's static, and it's not profit driven. It is in a way, every action that we take has meaning for profit making. So it is just the way of our reasoning, and we have talked about it. The world one, which is the physical realities, and the world two, which is the subjective concept models and mental model, and the world three is the conceptual framework and model. So we interacting of these three, world one, two, three, is this is just the refractions of what I have just explained to you. So we are making use of this intangible subjectivity and the conceptual work to return, to influence the physical reality, and so that we can get a better return. So information technologies, because of all these continuous data theory interactions, it promotes it not only establishes information a very attractive environment, but it also promotes continuous learning among each other. So we are indirectly using its corporate governance system established within the base of corporate and business ethics, and in tune of expanding through our solid, holistic corporate social responsibilities, responsiveness, and action, that it continues to improve our corporate governance system. So our corporate governance systems becomes very dynamic and not static, right? And this is very important. So just a note, the institutions and mechanisms that we discussed, and we have already demonstrated a lot of examples on institutions, which is, institution, right? It's like a house, like your institutions, the rules and regulations, cultures, and things like that. Policies and mechanisms also could be your policies, your structures, your processes, your monitoring control systems, and the way you interact with it, and innovations involved with it, and the IT, So all these mechanism, right? At the company level, the corporate governance structure, including all these examples of institutions and mechanisms, and at the company level, all these institution and mechanism you can see from shareholder meeting, right? It is a mechanisms where you can establish the communications between yourself, company, and the shareholders. So there is a shareholder meeting, which is part of the mechanism, and is part of the institutions of governance system, and the board meeting and the board structure, the board elements, and the support, the monitoring system supporting the board, and the components of the board, such as maybe audit board or compensations board, and salary, things like that, executive compensations auditors, right? And the most, this is this company structure. But if a company is within this bigger macro environment, so at the systemic level, then we are dealing with also institutional mechanisms also manifest in terms of this stock market system, stock market mechanism, financial systems of the company, of the nation, and the legal regime of this of our companies, industries within the nations, and the state intervention. So if we do something, if any company is not following certain rules and regulations, and there is no state intervention, then everybody will continue habitually to do because of these opportunities we talk about, and the fraud triangles, that everybody will continues to do this, take the opportunities to do the bad things, right? So if to prevent those things, to prevent people from provide unnecessary rationalizations of, well, this is the right way to do because everybody else is doing it, or the opportunities and pressures, and why not put up a proper state intervention system. So this are very important from the macroeconomic perspective and a macro environmental perspective. So corporate governance system is not only by itself. It is also the interaction between the structures of the company and the systemic structures of this macro. So there's a macro interactions that will allow your corporate governance to form easily, because the rest of all the shareholders are situated within this macro environment. And so and they are being influenced by macro environments and policy, right? So this is very important. So in other words, corporate governance involves the rules of business decision making, applying these micro internal mechanisms that we have just explained quite in length, and this and of course the institutional environment, plus this holistic systemic macro environment. And so, and again, it take roots in this corporate ethics and corporate governance and corporate social responsibility, and manifested, for example, in accountabilities, disclosure, visioning, theory, data, interactions, theoretical consideration, and a set of practices which we have just explained, such as IT, innovation, and monitoring and control system, ethical testing, and a whole bunch of things that we have discussed, and responsibility marketing wise or whatever. And so these are all corporate governance. there are various when every time when we set up a system, there are or design certain things that are always associated with cost, of course. For this relationship wise with each other, there are some transaction costs involving, especially we need to get ready and prepare and set up the monitoring system and dashboards to be more transparent, to be more accountable. So there is this transactions cost associated with greater disclosure, and do not look at this cost as this unnecessary. If you study the quality management systems in operations and production, you know that there is one kind of cost called prevention. So it is rather to have this preventive cost increase, or a study in supply chain management, the inventory, it is rather to have this inventory cost, preventive cost increase, rather than continuous reacting when the product defects come into the picture. That really can gives you a better optimum and more profit and things like that. So transactions costs associated with greater disclosures is very, very important. They are the and so how do you become disclosures, such as the cost of changing company charters in alignments with this transparency and the ownership of this board, and setting up dominating committees to dominate the, who are going to be the next executive directors, and who's going to be in the auditing teams of your company, and how you're going to pay compensations to the outside directors and external directors, and the percentages, and disseminating the information to relevant shareholders and stakeholders. And again, all these are disclosures and transparencies, and again, all these activities involve certain costs, and we call it transaction costs. And it is very important that we use the appropriate vision and mission and business ethic principles and theory to ensure that we have this efficient and very, very low well spent transaction costs, and reduce the ability to extract private benefits from the firm, in the sense that there is this principles of shareholders giving us the money for the organizational executive agencies to lead and operate this company, and so there is this principal agent transactions cost, but if you do not do that, and these it may and there are a lot of these shareholders are minor shareholder, right? The minority shareholder. So if you are not transparent, sometimes the big shareholders can control the agency, but then the minority shareholder cannot control the agency, which is the organization, and the organizations can take control of this little. So either you controlling it or the other side controlling it, but again, these minority shareholders will be manipulated. So it is very important that this disclosure and this corporate governance systems provides the private benefits to ensure that we are not taking advantage of all these minority shareholders. And another one is this corporate social responsibility theme of corporate governance. Corporate social responsibility, we know that it is a movement that where it is our company role is not only for ourselves, but also we have to be taking a leadership role for our society and for the ecological environment, and for every stakeholders, including our suppliers, employees involved, such as maintaining and preserve and securing the safeties of our employee, zero accidents, providing defects free for product and services for our customers, ensuring that we continue to have innovation so that we can continue to be able to allow these customers to be able to apply and better improve their productivities in their life. So so if we use that CSR movement it can turn the corporate governance as vehicles of corporate social responsibility, right? So corporate social responsibility, we know that there's a responsibility for the society, and the corporate governance is just the mechanisms and is way and the systems whereby we provide transparent and accountable structure for our system, for our organization, and we can use that rather than focusing individually on within our systems and a little bit of transactions with the shareholders. And so it's very minor financial transaction. But again, why don't we do that as and expand the role as a vehicle to a broader sense that corporate social that is in alignment with corporate social responsibility. So whatever we do, there is no crash and no misalignment. So if you work in a company, and I'm sure many of you, the students, upon graduations will move to the career company productions or operation, and you will know that there are a lot of ISO 9000, ISO standardization. It could be ISO 9001, it could be 9004 continuous improvement, it could be 14,000 on the environment, it could be 22,000 on the food production, quality control, and HACCP, GMP, and a host of other corporate social responsibilities and corporate governance standard. And all this, if it's different standards creates different focus, which will take away your time. Why don't we synergize them and be a part of each other? And that is exactly what I'm trying to say is corporate social responsibility theme of corporate governance in such a way that taking corporate governance as a vehicle for pushing all this corporate governance towards a wider views of broader ethical consideration. So we know, in a way, we are making corporations more attuned to rather than into this structural issues of the company in an accountable way. Why not to the public, environmental, and social needs? And these are very, very important. So as a part, in addition to corporate regulations and stakeholder engagement and accountability, investment of the accountability for the investor, why not to a broader extent? So corporate governance represents in conclusion, is a system, right? And by now you already know it is a system where you have a systems that has this mechanism in place, and that within the institutional environment that govern your company in a way. It means control your company and direct your company in a very stable but yet dynamic manners of continuous improvements and innovation, and supported by IT. So being institution and embedding mechanisms and rules within that system, corporate governance, therefore, it is actually a relationship systems and structures. And so never forget about the relationship. I keep on stressing the relationship in business ethic and in sustainability, such as our relationship, the relationship between the vegetable plants and the trees with this and the flowers with the sunlight, and and the soil, and all this interrelated. So it is a relationship system and structures involve the set relationship between a company's management, the board, the shareholders, and other stakeholders, right? All these are important key players, and provide structures of how all these parts of constituents, company management teams, the board directors, and the shareholders and other stakeholders are interacting and participating within that corporate governance structures of system, so that they can move toward a common goal. That is the visions of the company. So countries differ and often differ in the firm level governance norms. Every countries have different certain slight requirements, because there are different social environment, cultural environment, different historical knowledge, and different political structure, and so it is very, very important that we have to understand that this corporate governance are, even though we are in a global environment, global world, but different companies working in different countries do have to be sensitive and incorporate within the context of each variations of the different country. Yet at the same time, we have to know that we are working within a global environment. And some of the within the global environment, other countries are very well developed in the corporate governance system, such as advanced country, and they are probably more transparent and more accountable, or in certain sense, and so it is. And some of these countries, emerging country, they have the corporate governance, or they're just forming the corporate governance. But again, they are dynamically evolving. They are learning from each other, and maybe also, of course, everyone is learning from each other, but more of the emerging is learning from the advanced too. So it is a dynamic conditions of corporate governance that national corporate governance system continue to evolve in response to a major corporate governance failures within their own nation, and in also learning from this macro environment. So in a sense that we have even the macro advanced country, they have their own corporate governance system, but again, sometimes due to this corruption we have many situations in the world environment that either because of corruptions or because of people manipulating, and it really causes the crash of the economy in the world, not because of this the price fluctuations of the oil commodities, but and the interest rates, but or the political chaos, but it is really a matter of the result of all this corruption. So corporate governance attempt to prevent all this corrupting effect, and so it is a way of minimizing the a controllable risk in that sense, and something that we can control. Why not controlling it? But again, and we may not be perfect in the coverage and in the design, and so therefore, if there is any major corporate governance failure along the way, then we can learn the lessons and improve again and again. So a nation's corporate governance system is therefore it's a very dynamic platform, and very important, especially corporate governance. This failure or unethical behaviors are because we always have incentives and pressures, and we already discussed about it in the previous modules on the fraud triangle, and we always have incentives and pressures for doing something corruption, malpractices, and we always have opportunity, we always have our own attitudes and rationality that we think that this is the right way to do, and so we continue to do the bad things, thinking that other people will probably let us do it, and so because of all these failures will always be there. As far as human beings are concerned, because it is impossible. We have the common common conditions that there is no such thing happening. So it is very important, and therefore, because of these incentives and pressures and opportunities and assistance of attitudes and rationality that induce people to make bad decision, the U.S. Accounting Industry Reform Act of 2002 and Sarbanes-Oxley Act, and correspondingly in other countries as well in other form, and it being established to guide a more stringent corporate governance structure and operation in the operating companies in USA and of course in other countries. So it is a continuous improvement process. As the evolution, as we continue to improve, as the evolution and the structure process of in the emerging countries and continues to evolve and evolve and evolve and evolve. So emerging countries are learning from the advanced countries, and they're also adapting and improving based on rectifying all this corruption and failure of the corporate governance system. So they really are trying to improve it. But of course, because they are just emerging country, of course they are, whatever the design of the corporate governance systems will definitely will have some multiple deficiency at that particular moment in time and space. And so it is there is no perfect in the corporate governance systems, and we should take note of it and should allow continuous improvement and adjustment based on this national environment as well as the global environment. So macro and dynamic is very important. We are a corporate governance system. We are situating within legal structures of a company, of our country, and each of the country has their own institutional and regulatory requirements, and also there are all these situating within our countries, nations, economic environment, and they themselves need to be governed, and also within the political system, which also themselves need to be governed. So political parties need to govern itself. Economies of our nations need to have a system to govern itself, and the legal structures also need to have a governance structure itself, such as laws and courts and things like that. And within the company, we have this corporate governance. So there is a hierarchy of corporate. There is a hierarchy of governance issue. Macro, there is a macro governance. Micro, there is a micro governance. Corporation, there is a corporate governance, and things like that. Again, each of them need to work hand in hand, and each of them need to protect each other's. If for anyone, it's just like a system theory that I've just spread. And if the corporate governance is not adhering to its principles and doing a good job, then the legal if the legal is not working, then things will happen. Then there will be more and more corruption. And if more and more corruption, eventually, and if the economic system is not, governance system is not strong, then the economics fail. And if the economic fail, then it creates chaosity in the political, if the politics has no governance system. So it can go from the inside out of corporate governance, the influence, the impact on the legal, institutional, regulatory governance, to the economic governance, to the political, social governance, or it can work outside in, that we have a strong desire and commitment of the political government, such as in Singapore. They have a very well-structured political, social governance, whereby they use their visions and mission and the structures of political governance to consolidate and solidify a very strong knowledge and whereabout they're going to invest their money economically, and so on and so forth, which they establishes a very important legal structure for the companies to operate and with incentive and things like that. So research has shown that market rewards company that are well prepared and professionally prepared and in commitment to the corporate governance. So it is very, very important that we stress upon corporate governance, and the market will reward us, okay? Because there is trust, as I already say, and there is reliability, and there is this intangible asset as a result of corporate governance. Corporate governance is currently a very important subject of this international concerns and debate, and we are seeing why is that so? Because we're seeing a lot of the economics issue being turned upside down because of this corporate governance failure, right? As I told you, the inside out, right? And we are seeing this that if there is no proper structures of this legal, right? This legal institutional rules and regulations of governance of this stock exchange and whatever, then there is this there is no system for the corporation to govern itself. So we are seeing all this barrier leading to all this intensity of interest at the international level, and also partly because the globalizations, everybody is, from one end to another end, from one country to another country, and it is seamless connection between one to another's, and we can easily move from one market to another market. So it is free funding, free flow of equity, like capitalisms and things like this. All these become a driving force for a more serious considerations of corporate governance. And by now, I think you already know what happened, what is going on in terms of mechanisms, in terms of structures, in terms of system, in terms of processes, in terms of policies, in terms of monitoring and control systems and management, and the ITs and innovation. So I'm just trying to recapture those issues and components that are dealing with most of those are the most important issues in corporate governance design and implementation. So basically it involves corporate means a company. So what is the company? You got to really know, and I have demonstrated to you the company as an organization from the system theory perspective. And if you are looking from different perspective, you will have different knowledge and different concepts, and gives you a better different ideas how we can design corporate governance. So looking directly into what is the company can give you a lot of detailed ideas on what we can do in the design of corporate governance. So the slide that I provide to share is to give us a flexibility rather than constraining us with the rules and regulations of the countries. I think you can just Google and find it out, and it's not that difficult. And by the time, if you are if you understand all this theoretical connection and conceptual understanding, when you read those things are very simple. Okay, because these are just the contents and applications of all these theoretical perspectives, and at the university level, we need to stress upon this theoretical foundation, which you can not easily obtain from this practical domain. So in whose interest does the company need to have this corporate governance protect and enables and facilitate? So are they these customers or shareholders or investors, or what kind of investor? Is it a small scale investors, or is it institutional investors? Or is it the government's investors or whatever? So how is the role and responsibility of the companies able to fulfill those interests of these investors? What is the dominant ownership structure here? Is the board directors the percentage of ownership owners in that board of directors? And what about the executive directors? What about these directors? How many percentage should be the external the directors? And again, other things are the roles and the positions of the employees and managers. What are their roles, and how what is the relationship between the CEOs and the managers and the stakeholders and the shareholders and the audit teams and things like that. Financial system, institution, investor, government pension funds, and state involvement of the economy. In the economy, also involved in your operating systems of governance, and as I have already explained it, and the legal system too. So all these are just different in a statement forms of what I have just explained through in the graph. So the answers to each of these all these questions will give you a lot of directions and the concepts of how you're going to design your corporate governance, such as the responsibilities of all the actors, the structures of how you're going to design your corporate governance, and the shape of how of the national systems whereby your corporate governance system is situated within that. So corporate governance, again, as in summary, is the relationship sitting between the macro and the micro. So it is really the study the corporate governance need to consider the macro issues, the national system, because without that, micro cannot work. And without this micro commitment and operations, then macro cannot have the stabilities and improvement. So it is really the micro issues of organizations and value creation at the firm level, at the same time at the interacting relationship with the macro issues of national system that provides the stabilities and continuous improvement of the corporate governance. The micro perspective views corporate governance at the company level, explaining the behaviors of different stakeholders, different actors, such as managers, shareholders, and things like that, and the investors. And well, I have already talked about it. As far as the company is concerned, it deals with all the process and policies and mechanisms, all these mechanisms and structures in such a way that the company efficiently operate to deliver the goal. And so in a way that there is this value creation business processes whereby you get the funds, financial resources to allow you to value create and generate and operate your business, and then deliver the performances which are relying upon business process, business ethics principles, corporate governance structure system, and things like that. So there is a norms of principle, policies, and practices of your business ethic and corporate social responsibility, themes of this corporate governance, using corporate governance as a vehicle for you to reach out and may be more expensive, taking a more expensive function in the public and society and ecological domain. Those are all the norms, plus all the system, mechanisms, and institution that you install for transparencies and accountabilities enabled by the IT system, which is the system. And that will facilitate the investors and give the trust to the investors and shareholders to be more willing to fund the financial resources, which will get your value creations and business process to continue to operate and allow your company to deliver performance. That is this micro level mechanisms and systems and institution being architecturally depicted in this graph. So on the operational level, and then we will involve with all this monitoring and controls management mechanisms, which, this is just another continuing reinforcements of what I have just explained. And factor externals and internal to each organizations, therefore, should be systematically monitored, as I have already explained it in the IT. And the more we systematically monitor, the more we can make decisions. We have already explained it in the module 2, this ethical business framework, where we have learned many various framework from many professors and scholars in this business ethics and monitoring, providing us this channel of the exposing to all these different ethical issues and corporate governance issue. Okay, and so we can therefore better able to make decision. And by internal, it involves with a lot of actors such as the board of directors, and the formations of specialized board committees such as audit committee, the remunerations committee, dominating who's going to be the executive directors or CEO, related party transaction, ownership structures and boards, cross shareholding in ownerships of different companies, shareholding crossing each other's, and the creditor and so on. So for externals, are talking about this the macro environments of stock market, the market for corporate controls, and for where we can get our executives to be a part of our directors and our management teams, and where of our financial resources, debt, market, and information policies and investor. So anyway, the corporate governance is just it's just setting up the mechanisms and relationship and the system relationship, integrating all these internal and external stakeholders, monitoring mechanisms, for instance. Okay, and so that we can get sufficient data and analytics, computation and communication, and incentive mechanisms that we provide, reasonable returns on the shareholders, to the shareholders, and to our employees, and control mechanism ensuring that the values are delivered, risks are minimized, and things like that. So all these mechanism, right? There are a lot of mechanism, policy, operations mechanism. You have a quality manual, quality control mechanisms, and things like that. There's all kind of mechanisms you can think about it. And the macro level, again, we have already talked about, it involves the national systems of overseeing us, so that ensuring that there is this well-structured macro economic and political, and also this financial and rule and regulations of the company that oversight and overseeing and control and ensuring that we everybody behave according to that standard. And that is code of ethics in the company sense, but it is a systems codes of ethics, right? That we need to do. So there's this macro level involves national oversight systems of oversight as a systems of oversight control, referring to the dominating patterns of ownership that will provide you the codes of ethics for your ownership percentages and governance system, company orientation, the role and shape of your financial systems and legal regimes and social norms that govern your system. And the study of different spectrum of theories, and now we are getting into a little bit more details on this. There are various different types of theories involved in corporate governance system, and there are, as I already explained, the theory provide an explanatory capability to help us understand the phenomena of the corporate governance system. And so here therefore theory provide the foundation at the most fundamental level for because different countries have different corporate governance systems, and they're at different pace and different speed of development. And so if we have a strong theory, and we will know where we are and how we can integrating and learning from each other and converge towards a common global unity of corporate governance system. And so this theoretical foundations provide us the foundations and capability to make this convergence happen. So we call convergence and harmonizations purpose of corporate governance systems globally. And so everyone's will there will be why you do this, why you do that. Well, there is a common theoretical platform for you to create a dialogue so that you can learn from each other's and create a common ground. Provide a robust and quality governance platform for the organizations to operate professionally and accountably, because theoretical foundation provides us the incorporate various important views and concepts so that we can think reasonably and professionally, intellectually, and with that we should be able to better deliver the corporate performance outcome. And so it is very important that we study the theory. And so it provides wide theory, it provides fundamental logics and rationality, as I already explained. For example, A leads to B, and why A leads to B, and if you can explain that is a theoretical formation, right? So it is a fundamental logic and rationality to help you make decision, because doing A will lead you to B. So if you want to make a decision to generate B, then you need A. And so therefore, A to B is a theory, and therefore a theory is a fundamental logic and rationality to help you make a better decisions to lead to B. And to do that, you need to take actions on A and to monitor the B, right? So all these are just nothing but the fundamental understanding of theory. Adoptions of all this theory and turn it into corporate governance system, it would and if we monitoring them, it will provide us this data, the signaling device, right? As I've already explained it, and this signaling device or the data will being transparently reaching to every stakeholders and within our systems to provide the confidence to prospective investors that the firm is well governed, and so that they will continue to be more trusting us and give us more fund. And the more funds we have, the more sources of funds we have, the more ability we can leverage our resources, and the better we can, and the more we can expand our balance sheet, right? And that is there is a theory of signaling. If you study strategic management and corporate governance systems, or and also this supply chain, this signaling device is very important. And so I will stop here, and the rest of this each of the individual perspectives of theory we will discuss later, but this will give you an introduction of this module so that you can we can all well prepare for more challenging theories coming in our next discussion. So this is a digestible period, page 1 to 35, to give out the later groundwork for us to welcome and have an interactive dialogue between on various perspectives of this corporate governance system theory. So we will talk a lot of, from now on, we will have a lot of theories. One of them is very simple theory, which I have just explained, principal agency theory. And of course, there are also other types of theory. And so thank you very much for listening and hope you enjoy.